All right, fellow AMC stockholders, X-Max Trading here. Want to go over some pretty amazing DD that came out recently. Keeping up with the AMC fans. So go ahead and subscribe to the channel if you haven't already. Hit the like button, comment, and let's get started. So the SEC moves to force firms like Archegos to reveal swap positions. This is pretty amazing stuff. U.S. regulators seek to restrict hedge funds and family offices from using complex derivatives to secretly build huge stakes in public companies. The types of trades that fuel the collapse of Archegos capital management. Yeah, over-leveraged and, they made bad mistakes. SEC is poised to propose new rules that seek to address major regulatory blind spot exposed by the fallout from the implosion of Bill Hwang's firm earlier this year. Equity-based swaps that could be used to quietly build massive bets on companies. The new rules the agency is set to outline Wednesday would require more disclosure in public and place additional restrictions on firms that trade these derivatives. Positions worth at least $300 million, or 5% of the shares trading in an underlying security, would trigger a new SEC reporting requirement. Investors would have to disclose their identities, positions in the swaps, and underlying securities, as well as related loans, according to the SEC. Agency will also require reporting of large positions involving bonds and credit default swaps. I think this relates to AMC, right? We think that AMC, not financial advice, but that, credit default swaps or these equity swap contracts are being used to manipulate AMC to make huge bets, probably on the downside, and to hide those in offshore accounts, overseas stock market exchanges, the Cayman Islands, So this is pretty interesting. The SEC has dithered for years. That's an understatement. Dithered on overhauling the rules for derivatives, despite being required by Congress in 2010 to regulate the asset class. Because the credit default swaps, I think, in the '08 crash, they're famous in the Big Short, the credit default swaps, I think, caused massive losses, and that helped hurt the economy in some ways. But it's a useful tool, in the right people's hands. The agency's new plans would prohibit people involved in securities-based swaps trading from trying to manipulate the prices or trade on insider information. Yeah, that's what's going on. Money market mutual funds. Meanwhile, SEC's proposed a new rule for money market mutual funds that are meant to prevent the kind of outflows that occurred in 2020 on the onset of the pandemic. That turmoil prompted the Federal Reserve to intervene and rescue the money market funds for the second time in 12 years, spurring calls for SEC to tighten regulations. To bolster funds' ability to withstand another wave of redemptions, SEC may propose increasing the percentage of total assets the funds must maintain, and cash other assets that can be liquidated quickly to 25% overnight, and then 50% weekly liquidity. So increasing the percentage of total assets the funds must maintain in cash. Removing the fund's ability to charge fees for redemptions or temporarily restrict them if liquid assets fall below a certain threshold. Requiring the institutional prime and tax-exempt funds use a swing pricing mechanism, the agency says, forces redeeming shareholders to bear costs of pulling out the money, and boosting some reporting requirements. Another move, Wall Street top regulators have considered a plan to increase disclosures for companies repurchasing their shares. Stock buybacks have drawn the ire of Democrats in Congress, including Elizabeth Warren. All right. This other one, I think, might be related to the SEC's rules. So this is from yesterday. GameStop and AMC stocks rebound. Meme traders are buying the dip. They're buying the dip. They're holding. This is a worldwide phenomenon. Not financial advice. Meme stock enthusiasts banded together on Tuesday to pull their favorite names out of the rut they have been in for weeks. GameStop and AMC were rebounded early on Tuesday, and volume soared. Both stocks have struggled in recent weeks with riskier assets like cryptocurrencies, along with cryptos. Shares of movie theater AMC up 2% after slipping 15%, while video game retailer GameStop rose more than 5% after the 14% drop on Monday. Both stocks had started the day in the red on Tuesday before the rebound. Looks like GME isn't dead, one user celebrated on Wall Street Bets. There appears to be momentum among retail investors to buy the dip. Fidelity published a list of the most popular stocks being traded by self-directed investors on its platform. And AMC and GameStop were ranked 3rd and 6th respectively on Tuesday. So AMC did better than GameStop. For both stocks, buys vastly outnumbered sells, with AMC showing twice as many buys as sells, and GameStop registering 7 times as many. So why did the price go down, guys? Why did the price go down? Come on. 10:30 a.m. GameStop volume was over 2.8 million shares, already outpacing the stock's daily average volume of 2.4. Retail investors plowed a net $325 million to AMC and $4.2 million to GameStop last week, according to Vanda Research. The Reddit darlings have made meteoric gains this year, but in the past month have been tougher going. Short interest has increased in both names in recent weeks, noted Matt Kors, AMC Bull, on his YouTube channel. He also thinks larger investors are pivoting out of high-risk equities given the state of the overall market, record inflation, and the pending Fed announcement. And, of course, the time of the year, right? It's time of the end of the year, tax loss harvesting. Chief strategist, so Steve Sosnick, chief strategist at Interactive Brokers, thinks the tax loss selling may be pushing the prices lower. People who bought into the stocks before January are sitting on huge gains. But those who joined the bandwagon later may be in the red. In a year when most stocks soared, investors may be using losses on meme names to balance out other gains for tax purposes. It's also tough to hold on to momentum without more fundamental changes at the companies. AMC has made fundamental changes, right? The movie theaters are back at 100%. NFTs, blockbusters coming out, popcorn selling, other merchandise. Give me a break. Enthusiasm for the magnitude of what we saw earlier this year in the meme stock heyday is difficult to maintain, Snodzik wrote in an email. So we find ourselves in a situation there are a few catalysts to support their valuations, let alone push them higher. BS, man. Wait till the beginning of next year, right? In the springtime, Omicron's be fading. Not financial advice. So, I think that, they're trying to knock it down again. Monday was particularly rough. Investors looking ahead to the Fed's Reserve meeting. Fed is largely expected to speed up the pace of tapering, following hawkish comments to Jerome Powell. And the markets seem to be pondering a world of tighter monetary policy. GameStop has fallen 4.4% since November 22nd, but up 626% year to date. AMC has dropped 44% in the same period and is 996% higher so far in 2021. So yeah, about 10x. Because it's basically like, $2 in January. No, it's 23, 24. Pretty amazing. And I bought 1 GME, 2 AMC. Literally, that's all. Basically, discount FOMO. If what Wall Street Bets Supersonic says is what's going on, that's going to happen, we may as well get a discount ticket. Yeah, discount lottery tickets. So yeah, pretty amazing, guys. And I think that if the Fed raises its rates, then I think, after the research is out, not financial advice, the cost to borrow for the shorts actually goes up because it's a loan. They're borrowing shares. There's a fee to it, and all loans are influenced by the Fed's rate. So that may increase the cost to do this kind of shorting. So anyway, guys, until next time, comment on the videos. Let's start a discussion. AMC stockholders, we got green eyes. We're going to do this. All right, later, guys.